Hey guys, welcome back. My name is Leland Baptist. I'm one of the private bankers with C.L.E.A.R. And for the Asset Builders Club and those who are interested, we always go through this worksheet. Now this is step 3 of the worksheet of us grading an asset, okay? And this is called the liquidity event. Okay, liquidity exit. So what we have here is we're grading the liquidity exit of each particular asset from the levels of high, medium, and low. Okay, high, medium, low. Very, very simple. You only have 3 options to choose from, and it makes perfect sense as we go through it. All right. So first and foremost, what the heck is a liquidity exit? A liquidity exit is simply how difficult it is to capture your money in a given market. So for example, a really easy example for everyone to understand is real estate. You buy a building, you own this building, right? And now you want to get your money back. Now, of course, there are different methods for that, but we're talking about primarily selling the asset to recoup all of your investment back and possibly a little bit more. So in the sales process, this can typically take anywhere from 30 to 45 days, all right? 30 to 45 days. Now, granted, each market is different. You may have a market where things move a little quicker. You may have a market where things move a little slower, all right? But typically 30 to 45 days. Well, in that case, that liquidity exit is given a L for lower, okay? The next thing we have is medium. This is a liquidity exit of one to two weeks. So what this means is, let's say you own a business. Hypothetically, you own a business, and maybe you guys are looking to do what's called a management buyout. And that management buyout consists of, 3 employees, 3 managers, and they may already have a vested interest in the company, and they're able to pull together their cash, their liquid, and buy you out. That could take place within 1 to 2 days, as an example. Now, for high, talking about 1 to 3 days of getting your money back relatively quickly. You can have an exit. In other words, for a stock exchange, you may sell some property. You may sell some stock. All right, you sell some stock from the stock exchange, and there's a liquidity event that takes place, and now you want to go ahead and grab that money out of the stock exchange. Well, that's going to be a high liquidity exit because it's quick velocity. You're able to get that money back fairly quickly. That's going to be 1 to 3 days. All right. If you're in too many of these, what we consider low liquidity type of assets, what you may find yourself in, if you need capital, is you may find yourself in a illiquid situation where you have to buy time and things like that. So I hope that makes sense. Once again, this is the 3rd way that we grade an asset. We grade it high, medium, and low, and it's called a liquidity exit. So take out a sheet of paper, and I want you to decide right now the assets that you own. Where are you? Are most of your assets in real estate to where for most real estate transactions, it will take 30 to 45 days? Is that where you are right now? Or do you have a lot of your assets are in stock where you have a high liquidity exit rate, okay? Now that you have decided, now you have chosen where a lot of your assets are right now, where would you like the remaining of your assets to be in the future? Where would you like the remaining of your assets to be in the future? Now, I must say this, and in later videos we'll cover this, but there are ways that you can take an asset that is, let's say, medium or mid in the liquidity exit and make it accelerate it to become high. There are ways to find a way to have an asset that is in the low liquidity and accelerate it to make it become medium, okay? But what you typically won't find, you probably won't find a low liquidity asset immediately becoming a high liquidity asset, okay? So there are strategies to have an asset or two bypass the low to mid or the mid to high, okay? So now that you have decided what works best for you, I will see you on the next video.